Silver is sitting at $84.44 per ounce right now, today, and most people, most investors, have absolutely no idea what's coming next. The story behind that number isn't just about silver, it's about oil, it's about the Gulf, and it's about a chain reaction that's already been set in motion. If you're not paying attention, you're going to miss one of the most important wealth-building windows of the decade. Because this isn't a coincidence. Everything happening right now is connected. Welcome back to Silver Signals. I'm Yali Jiang. And if you're new here, first of all, welcome. This is the channel where we cut through the noise and follow the real money. If you've been watching us for a while, you already know we don't do hype, we do facts, analysis, and the kind of insight that actually helps you make decisions. Today's video is one I've been building up to for a couple of weeks because everything is starting to converge at once. Oil is exploding, gold is at a critical technical crossroads, and silver is quietly doing something extraordinary. By the end of this video, you're going to understand exactly why these three markets are linked and what the next move might look like. If you haven't subscribed yet, do it now, hit that bell, because this is the kind of content you do not want to miss when it drops. Let's start where everything starts right now, crude oil, because what's happening in the oil market this week is not just significant, it is historic. Price has sliced through resistance levels near 77.70, spiked past 79, and cleared the July 2024 peak near 84. Best case upside, if prices hold above 79, sits toward 86.70, and we're not talking about a slow grind higher, we're talking about a market that has broken out with conviction. More Gulf giants are cutting output, and that's not a rumor, that's happening right now. The Gulf Cooperation Council producers, the big dogs of OPEC Plus, are tightening supply at the exact same moment that geopolitical tensions in the region are as elevated as they've been in years. Supply going down, risk going up, that is a recipe for oil prices that don't just stay elevated, they accelerate. Now, why does this matter for silver and gold? Because oil is the engine of global inflation, and when oil rises, everything else rises with it. Shipping costs, manufacturing costs, the cost of food, the cost of energy. When inflation expectations rise, something very predictable happens. Smart investors start rotating into real, tangible assets that hold value when paper currency loses purchasing power. The pain isn't being felt equally around the world either, because import-dependent Asia, countries across Southeast Asia, South Asia, parts of East Asia, they lean heavily on Middle Eastern oil and are feeling the most immediate pain. When your country imports the majority of its energy needs and the price of that energy surges, you're not just dealing with higher pump prices, you're dealing with a currency under pressure, trade balances deteriorating, and central banks that suddenly have a much harder job managing inflation. And what do investors in those countries do when their local currency starts to look fragile? They buy gold, they buy silver, they buy assets that no government can print. This is a global phenomenon unfolding in real time. And the silver price chart is reflecting exactly that. $84.44 per ounce today, up $1.23 on the session. Per gram, you're looking at $2.71, and per kilo, $2,714.75. These are not small moves. This is momentum building, and the structural backdrop we just talked about suggests that momentum has real reasons behind it, not just speculation. Now let me ask you something, and I genuinely want to hear your answer in the comments below. When you look at what's happening in the oil market right now, does it change how you're thinking about your precious metals allocation? Are you adding to silver here, waiting for a pullback, or maybe wondering whether to rotate some exposure from gold into silver? Drop your thoughts down below, because this community has some seriously sharp minds in it, and I learn from your comments every single week. All right, let's talk about gold, because gold's story right now is one of the most technically interesting setups I've seen in months. Gold managed a breakout above the top of its late 2024 channel, and that was huge. Everyone was watching that level, and when it broke through, there was real excitement. But it has disappointed since, and the follow-through hasn't been there. The 50-day moving average, sitting around 4,858, has become the critical line in the sand, and historically, this level has provided intraday support for gold. When the price dips toward it, buyers tend to step in. It's the kind of support that means something not just technically, but psychologically. The RSI is sitting around 51. That's slightly bullish, but slightly is the key word here because the momentum is fragile. The bias is not decisively negative. Gold hasn't broken down. It hasn't given a sell signal. But it also isn't surging with conviction. What we have right now is gold at an inflection point, a crossroads. And that actually makes it more interesting, not less. The next catalyst, whether that's a geopolitical escalation, a US dollar weakness signal, or a major inflation print, could send gold moving sharply in one direction very quickly. When oil is surging and Gulf producers are cutting output and Asia is absorbing higher energy costs, The inflationary pressures that creates are exactly the kind of environment where gold's 50-day moving average support gets tested and held. The fragile momentum in gold right now isn't a sign of weakness in the long-term thesis. It's a pause before potential acceleration. Investors who understand that distinction are the ones who position correctly before the move, not after. Now let's bring this all together, because most people talk about silver as the little brother of gold, poor man's gold they call it. And while there's some truth to that in terms of price, what that framing completely misses is silver's industrial demand story. Right now, the industrial demand story is colliding with the investment demand story in a way that creates something unusually powerful. Gold is purely a monetary metal. It stores value, it's held in vaults, central banks love it, but silver is both a monetary metal and an industrial metal. It goes into solar panels, electric vehicles, semiconductors, and electronics. And when the global economy is stressed, the long-term structural demand for silver in the clean energy transition doesn't slow down. Those government mandates don't get canceled because oil went up 30%. If anything, higher oil prices accelerate the push towards solar and electric, which means silver gets hit with a double wave of demand at exactly the moment when its monetary appeal is also rising. The gold to silver ratio has been historically elevated for years, and whenever that ratio has come back toward historical norms, silver has dramatically outperformed gold on a percentage basis. When we have the kind of macro environment we're describing today, oil chaos, inflationary pressure, geopolitical risk, Asian demand, silver historically moves faster than gold to the upside. It's a more volatile, more explosive market, and for investors with a longer time horizon and the stomach for that volatility, silver at this price point represents a genuine opportunity. Here's the twist, and this is the thing I want you to walk away from today's video really understanding. The conventional wisdom says, buy gold when you're scared and buy silver when you're greedy. But what today's market is showing us is that you don't have to choose, because the same macro forces driving gold's safe haven appeal are simultaneously driving silver's dual demand story. The oil shock creates inflation pressure, which lifts gold, and the inflation pressure accelerates the clean energy transition, which lifts silver. It's not a zero-sum game. The smart play is to hold both, with a weighting towards silver if you believe we're at the beginning of a multi-year metals cycle, and the evidence right now strongly suggests that we are. Think back to where we started, $84.44. A shocking number if you remember what silver was trading at just a few years ago. But in the context of everything we've walked through today, that number starts to look less like a ceiling and more like a launching pad. The oil market chaos is not a one-week story. It's a structural realignment that's going to take months, maybe years, to fully play out. Every week that crude oil holds above those breakout levels, every week that geopolitical risk stays elevated, every week that Asian central banks feel the heat of rising import costs, is another week that the case for precious metals strengthens. If you found today's analysis valuable, then hit that like button right now. It takes 2 seconds, and it tells YouTube that this kind of real, substantive content is worth showing to more people. We're building a community of serious, thoughtful precious metals. Investors here at Silver Signals, and every like, every comment, every share helps us do that. If you're not subscribed yet, subscribe now. And if you've got a friend who's been asking about gold and silver lately, send them this video, because this is exactly the kind of foundation they need. I'm Yeli Jiang. Thank you for spending your time with me today on Silver Signals. Stay sharp out there. The markets move fast, but the investors who do their homework and understand the why behind the price moves are always the ones who come out ahead. I'll see you in the next one.